Welcome to the Real Estate Investing Morning Show with your hosts, Wayne and Gabby.
Hey, good morning.
Good morning, real estate investors. Welcome to the Canadian Real Estate Investing Morning Show. On today's show, we're going to be talking all about, is it possible to fully finance your investment properties?
Ooh. Is it, isn't it? You're about to find out.
This is coming from a investor question that emailed someone. An investor emailed in a question asking about, I'll get into the email in a little bit, but asking all about how to go about getting a down payment for an investment property if you don't have one. Or is it possible to get full financing from a seller?
Yeah, I think that this is going to be interesting because there's different ways to look at it, and there's obviously rules that need to be followed, bank rules and lender rules. So yeah, we're going to dive right into it, and yeah, it'll be a great show. Good question.
Yes, absolutely. Keep sending those questions in. We
Yes,
broadcast the
love it.
show live every weekday morning at 7 a.m. Mountain Time. On YouTube, you can join us by looking up the Canadian Real Estate Investing Morning Show or Wayne Hillier, Real Estate Investing Coach. You'll find it just as soon as you subscribe to the channel, Wayne Hillier, Real Estate Investing Coach, you will get a notification that Wayne is live or that we are live. And you just join in and you can be a part of the conversation like so many other real estate investors who join us every weekday morning. If you have any questions, bring them, put them in the chat. We will answer them for you. Okay. Or what you can do is you can email them in to info@reimorningshow.com. We will read the questions. We will answer the questions, provide free coaching for any questions you have, okay? Anything at all. We had a great question yesterday on yesterday's show.
Loved it.
And I haven't heard back from that investor yet, a response yet. So we'll wait and hopefully we hear back to how the conversation went. I was a little aggressive towards the husband, though, so maybe I hope I didn't ruin their marriage.
They're fine.
You think they're fun?
They're fine.
Was it a good show?
Yeah, I don't think that you were too aggressive. I think you just said what needed to be said. And I think that people appreciate that.
Yeah.
I don't think people like just being told what they want to hear. And if there are people like that, then hopefully you did scare them off or piss them off or whatever. Because we want people who want to know what they need to know.
Yeah,
right?
Absolutely. Real estate investing is not scary for us, but it can be scary for a lot of people if you don't understand things and you don't. What you don't know can really, really, really mess things up for you and your family. And that's why we do this. We do this for our family. We do this for our future. So there's no sense in taking any unnecessary risks. Let's do it right. Let's do it safe. Let's get great returns, right? Speaking of family, my daughter is here. Another cameo. Blessing us with our presence. She's got the weather for us today. We're broadcasting this show live from Edmonton, Alberta. But what's the weather looking like in Edmonton and across the country today?
The weather today will be 29 degrees in Edmonton, 19 degrees in Vancouver, 24 degrees in Winnipeg, 25 degrees in Hamilton, and 26 degrees in Halifax.
And that was 29 in Edmonton? Wowza. Okay. Edmonton wins today. Thank you so much, Everly. We appreciate that.
Thank you, Evie.
Sounds like a good day. No rain?
Not for us. It looks like Vancouver's not having the best day. But
Oh, no?
yeah, rain and 19.
Okay.
Yeah.
Okay. Updates in our business. Wow. It seems like every day I've got something new, another offer, another deal.
Can't keep up, Wayne.
What's that?
I said I can't keep up, Wayne.
Yeah. I'll try to, I'll order some, what do you call them? Like floaties? I'll order a life raft for you, or
Just
like
stay above water.
a pool noodle, or snorkels so you can stay above water. Why not? I mean, if the deals are rocking, then I don't know.
Poppy comes a knocking.
Poppy comes a knocking. There you go. There you go.
I feel like you're trying to turn like writing offers and getting accepted offers into an Olympic sport. I think that that's what you're doing, and you're like training for gold.
Baby, yeah. You can already they can just hand me that gold medal.
Yeah, pretty much at this point.
It's no competition.
Yeah.
Nobody can beat me. I am the best that there is, the best that there was, and the best there will ever be. Because I shouldn't get ahead of myself. I wrote another offer last night. I'm pretty sure it's getting accepted. We just haven't received the signatures yet. But
Mm-hmm.
wrote another offer last night on another cash flowing rental property. This one's off market.
Yes.
Cross our fingers.
crossed.
We
Yeah.
should have word back here. It was supposed to be last night, maybe this morning.
Yeah.
Hopefully another accepted offer.
Yeah.
Um,
This one, like I'm excited about. It's very rarely that I actually see listings, but I saw the listing on this one yesterday, and I'm like, damn, Wayne, like you gonna go on this one? Like it's gonna be so easy to rent, and that's what I care about. I'm just like,
simple.
yeah,
Simple,
this
easy.
one's gonna be so easy. Yeah.
Uh,
I mean, I haven't seen it in person, so of course, there's that, but.
yeah, and so actually, if you guys don't mind waiting, I was gonna look at the calendar today to see what my day was looking like, to see if I could actually go and see it.
Waiting.
It's not tomorrow. It's not Saturday. Sunday's already filling up too. Oh God, it would have to be today.
Yeah.
Otherwise, I'm
squeeze it in.
pushing this till Monday. Gosh golly, calendar is just jam packed. No, anyways, so yeah, we're buying lots of properties right now. It's a good time of year to get it because there's just lots of supply and not a whole heck of a lot of demand. So I'm getting in there and I'm writing aggressive offers and with next to no competition, and I'm getting good deals.
Mm-hmm.
Like this one that I wrote on yesterday. We're not 100% sure yet, but it is
Quick math.
about 7. I got about 7% off market value.
Under market value.
Doesn't sound like very much, but that is a lot.
Hey, that's a deal.
That is a lot.
That's a
And
deal.
most people
That's a
get
good
like 99, 98. You know
Yeah.
what I mean?
Yeah.
7% off, like just easy. And it cash flows. It'll cash flow about 6 or, well, actually depends. It's going to probably cash flow about $700 a month.
Ooh-wee.
Yeah. Yeah. It's, I don't understand why more people aren't jumping on this.
Yeah.
And if you guys don't know where these deals are, and you don't know how to find them, and you don't know what it is that we're talking about, just keep asking questions. That's what the show's here for. Like,
Wayne,
what other real estate coach out there is doing as much as we are? You know what I mean? So there's people talking about it, and there's people that are doing it, and we've been doing it for over 15 years, every fucking year. Let's go. Like, there's stop watching, stop listening, start doing now.
Yeah.
For the love of God.
do you remember when we started and like we had like cash flow goals and like all sorts of different like kind of goals set up for ourselves?
Yeah, those were silly, weren't they?
But could you, yeah, I mean, looking back, but could you imagine if these types of deals were available? Like everybody always says like, oh, it's harder than it used to be to, get into real estate investing, and all the rules are always changing. They're making it harder and harder and harder and like all that kind of stuff. But like I'm looking at right now, and I'm looking at the deals that you are picking up for us. I'm looking at the deals that our students are picking up. A lot of them saw Dennis's deal on the bus tour on Saturday.
Yep.
Can't remember. I think it was $650 a month cash flow. Like
$620, yes.
$620. Okay. If these types of deals were available when we started, we would have hit our goals so much faster for starters. Like even though those goals seem silly now, but like we would have gotten so farther ahead so much faster.
Mm-hmm.
And yeah,
They're
there and it's easy.
I completely agree.
They're there and it's easy.
And these types of deals, these specific types of deals are available right now, and they won't be available forever.
Mm-hmm.
It's
Yeah.
eventually it'll dry up. Prices will eventually go up too high where the numbers don't make sense anymore, where the cash flow won't be 700 anymore, it'll be 300, which are still great numbers, but then you'll be like, oh, I want the $700 ones. But you won't be able to because the prices are too high and the financing costs, the mortgage payment will be higher, and it's going to chew up all the cash flow.
Yeah.
And property taxes, insurance will be higher too. So they're here now. Take them while they're here. But I have no doubt in my mind and no fear that I have confidence in that even when these dry up, we'll find other opportunities.
Yeah.
Because when one door closes, another one opens,
Yeah.
right? Edmonton Garden Suites. is the next big opportunity. It's already here. We're taking advantage of it. We've got another property. We were talking with the builder yesterday, and drywall's going up at one of our developments. Multi-unit garden suite, 4 units. It's going to cash flow over $1,600 a month. We're building into $250,000 worth of equity once it's completed. And drywall's going up. Once drywall's done, there's one last inspection, I think, and then we start putting everything back together. So, like, guys, these deals are out there. If you want to learn how to do them, reach out. We got a great mentorship program. We can teach you how to do this. I'm excited that the garden suites are like really, really, really cool. Really cool. And I think that if you can really, if you got what it takes, it is a little bit more work because you're going to have to bring more money or you're going to have to raise more money. The buy-in is higher, but the juice is worth the squeeze. It is you're saying, like, I wish earlier on we had these types of deals. If you got into like multi-unit garden suites in Edmonton early on, you could be set in a couple of years.
Yeah, 100%.
You could be set for all of your long-term goals in a couple of years. If you're willing, now it's going to take some hard work. I'm not saying this is just going to be like, I want to do this. Yes, please sign me up. It's not that simple.
Yeah.
You're going to need to bring a ton of money or you're going to need to learn how to raise a ton of money. But if you can do that, you're laughing. You'll be set up.
Yeah.
And it's just a little bit of work up front. I'd say about a year to 2 years worth of like hard work and you're set for life.
Sounds pretty nice.
Right? If you're willing to put in the work.
Yeah.
I'm willing to put in the work. Look at where we are now and I'm still putting in the work. You know what I mean? I'm still building out the portfolio. And I hope that says something too. Like,
well, I think also that I hope for most people that they can set a goal, they can reach it, and they can be happy to then, enjoy that. Mm-hmm. And then you have people like Wayne, where it's just like, okay, then a new goal is created. It's like, oh, accomplish that one. What else can we do?
Well, everybody's different, and this is what I love doing. I like winning. I like fucking conquering. I'm an entrepreneur. I love the thrill of the chase. Yeah. And to quote Deep Purple, it's not the kill, it's the thrill of the chase. This is what I love doing, and I love winning. I love being better. I love it's a game to me. I don't need to. It's a game to me, and it's fun. And it's not about being better, but there is some part of that. I mean, how many of you guys play sports? How many of you guys play soccer? How many of you guys play hockey? Why do you play? Do you play to pass the puck, or do you play to win? There's fun in competitiveness, right? There's fun in going out and winning. That's why we play video games. That's why we play board games. That's why people jump up and flip the table when they lose at Monopoly. You know what I mean? So it's not a bad thing. I love it. This is what I love doing. I love finding the next big opportunity. I love helping people too. I love seeing the smiles and the joy on people's faces when they get to do it as well. Mm-hmm. So anyways, I'll never apologize for that. Okay. So what I'd like to do is I'd like to get into today's question that was emailed in. We are going to be talking about whether you can or cannot borrow down payments for investment properties. And additionally, if you can or can, whether you can or can, and or, how do you go about...
Can or can?
Can or can't,
okay.
And or. My introductions have been absolutely terrible this week.
You said can or can twice in a row.
I know. I can't think.
Okay.
We're going to talk about seller financing as well, is what I was trying to get at.
Okay.
Give me a quick little commercial break. There's 3 companies here that you're going to be listening to. You're going to be hearing about Keaton Kirkwood, investor-focused mortgage broker extraordinaire, our highest recommendation for a mortgage broker in Canada. If you're looking for financing, talk to Keaton. You're going to hear from Steve Soniff at Fingo, Bookkeeping and Tax. You need bookkeeping? You need accounting needs for investors, for your business, for your real estate portfolio? Call Steve, call Fingo, and you're going to hear from Calvin Realty, investor-focused realtors in Edmonton. By the way, Calvin's going to be on the show tomorrow, talking about the Edmonton real estate market, talking about the upcoming real estate investing conference / summit on September 11th to 13th. Okay? Go watch these. When we come back, we're going to get into the question.
Real estate investors need to treat debt differently than homeowners, and at Kirkland & Brennan Mortgage Group, we understand that. For the last 11 years, we've helped real estate investors plan and build their portfolios. We understand how to help you avoid fees, penalties, getting yourself stuck, and making sure that the deal you're doing today doesn't stop the deal you want to do tomorrow. You can reach out to Keaton, Keaton, at kbmortgages.ca. Put plan on the subject line, and we'll help you build a plan and then realize it for your real estate goals. We also coordinate with the other professionals like your accountant, lawyer, realtor, and we will help you build your portfolio. So reach out. We'll do our best to help. Thanks, guys.
You've got showings, lease signings, suite renos, condo board meetings, credit checks, mortgage financing, and every so often the tenant clogs the sink because they shoved macaroni down there. Stop. Breathe. Leave the bookkeeping to Fingo. Fingo is specialized real estate bookkeeping by real estate investors with tailored services for maximum returns. Save time. Enhance your returns. Claim the plumbing repair for that ridiculous macaroni fiasco. Book your free consultation at fingo.com.
Summer. While everyone's getting distracted, this is when the market gets quiet. Not because the opportunities disappear, but because the people do. Vacations, long weekends, these are the distractions I'm talking about. And that's exactly when serious investors make their moves. At Calvin Realty, this is one of our favorite windows. Less competition, more flexibility, and sellers who are actually open to negotiating. While everyone else is stepping away, we're stepping in. If you're looking to buy right, not just buy fast, this is your edge. Calvin Realty. Opportunity doesn't take time off.
And we are back.
I was zoned out there.
Why?
Did you see me jump?
No.
When you clicked the button?
No.
I don't know. I was in a trance.
Oh, okay. What were you thinking about?
I have no idea.
Oh, come on. Just say me.
You, honey.
I don't believe you.
Anyways, I'm back.
Okay.
I woke up. All right. So we have a listener question that was emailed into us last night, and it says, "Hi, Wayne and Gabby. I can qualify for a mortgage but don't have the down payment. How do I borrow the down payment or get full financing? Thanks for all that you do for the community."
Well, thank you so much for the email.
Mm-hmm.
And so 2 parts here. Let's break it down. How do I qualify?
They can qualify for
They
the mortgage.
can qualify for a mortgage, but
Don't
they
have
don't
down
have the down payment.
Mm-hmm.
So how do I borrow the down payment or get full financing?
Yeah.
Okay.
So
down
borrow-
payment or full financing?
Borrow down payment or get full financing.
Okay. Sorry. I guess that should have been a lot easier to process. What's going on with me? Am I having a stroke this morning?
I don't
just
think
can't
so.
seem to. Or this week? Am I having a week-long stroke? Does my face seem even to you? Is it drooping? Okay, now everybody's on Wayne Watch. Okay, so borrowing the down payment. Let's start off with that. Short answer, it depends.
We'll just leave it at that.
Oh, wow. Interesting. Short answer, it depends. The reason why I say that is because all major lenders do not allow you to borrow the down payment. There are rules, mortgage rules, that limit you up to 80% loan to value. If you ever hear 80% LTV or LTV percentage, that stands for loan to value, meaning that a lender is allowed to give you 80% of the purchase price, they are allowed to lend you up to 80% of the value of the property. So if you're buying it for $500,000, the most that they can give you is $400,000. Then there are requirements for where the remainder of the money comes from. That is your down payment. You are required to come up with the other 20%. And there are rules as to where it comes from. They want to make sure that you have some skin in the game. They want to make sure that the money is coming from verifiable sources. Ultimately, they want to make sure that the money is coming from your personal savings.
Yeah.
Okay.
They want to make sure that you're not over leveraged at the end of the day.
Yeah, because if you borrow all of the money, if you were to borrow 80% of it from the bank and then the other 20% of it from another lending institution, you have no skin in the game. What happens when you can't make your mortgage payment? Whether it be a home or an investment property, what happens when things go sideways? If you don't have any skin in the game, then you'll just walk away, right? And they want to know that you're actually going to make an effort to pay for it. So you having some skin in the game, you having 20%, you having, in this case, $100,000 in, will motivate you to do what you need to do in order to fulfill your obligations of this this mortgage or this loan contract. So there's some legal rules. There's also some lending,
Like internal rules.
Internal rules, just to to ensure that you're held accountable. Now, I said home or investment property. Generally speaking, 80% is the loan to value is like the rule for all lending, except there is you can go lower than or higher than 80% loan to value. You can go up to 95% loan to value if it's insured. And the only way to get insurance is if it's your primary residence. Okay. So if it's your primary residence, you can apply for mortgage insurance, which you are responsible for paying. And that will allow you to go up to 95%. So they will allow you to, leverage yourself almost to 100%, but they're going to require you to get insurance for it. Now, CMHC is the most common one that offers that. We're not talking about MLI Select here. We're just talking about CMHC insurance for primary residence. That amount, which I can never remember how much it is, 3% or 4% of the purchase, that gets tacked on to your mortgage. So it's a $500,000 house. 5% is $25,000. So what they'll do is you'll get a mortgage for $475,000 plus they're going to tack on the CMHC fee on top of that. So let's say it's 3%. So they're going to tack on $15,000 on top. So instead of having a $475,000 mortgage, you have a $490,000 mortgage. You put 25 in, but you actually only have $10,000 worth of equity when you start. So that is possible. That is possible if it's your home. But if you're trying to buy, for this example, you're trying to buy an investment property, you are not allowed to do that because this is clearly not your primary residence. Mm-hmm. Okay? Yeah. So be aware of that. And I know you think you're smart. I know you think that nobody will ever know. And they probably will never know. Just be really careful when you're committing mortgage fraud. Okay? Don't recommend. It's a slippery slope, and 10 out of 10 do not recommend. Yeah. Okay, that's I don't know. We don't have any. We used to have sound effects and clips, but we don't have them anymore. Yeah. But I don't know.
Don't do it.
Don't do it.
Sorry. Some people might consider this borrowing, but in essence, it's just accessing your own equity that you have built into something. But the only other thing that I see in here is that if you do already own your own home,
yes,
and you pay down your loan, your mortgage on your own home, and you have equity that you can access, that would be one way to quote unquote borrow, because all you're doing is accessing that money that's already yours. Right? Yeah. So that is one area that we could consider. It's safe to borrow funds for a down payment, and the lending institutions do allow you to do that.
So let's just rewind on that a little bit so that people understand what it is exactly that you're talking about. So you're saying it is possible to borrow the down payment?
Yes.
You
Yes,
can.
you can.
I was getting into it. You just kind of like, here's one more thing, and you just kind of slipped it under. But like, this is where I was going to go next, because I said it depends, right? And so there's lots of different ways to look at this. And if you remember earlier, I said you can go to another lending institution, which, meaning like you can't go to like a bank and say, hey, can I get a personal loan for $100,000 unsecured? Right. So, you might have a line of credit at TD or something like that, or you might have a line of credit at, Scotia, or fill in the blank with a bank.
Yeah.
You can't just go to them and get an unsecured loan
Right.
for your down payment. They want to make sure that it's either savings or secured. And it could be secured to an existing property that you already own. So let's say, for example, you already own your home and you have a significant amount of equity in there and a home equity line of credit. Big difference between a line of credit unsecured and a home equity line of credit, because home equity that is your savings. There is equity in that property, and you can borrow that equity because it's secured to another property. It's secured to something. It's secured to equity. So they could go after that equity. You can borrow that secured money and use that as a down payment for the next property, which means that you can actually borrow the money for your next property. It just has to be secured to equity that you already have.
Yeah, it's like borrowing from yourself, kind of.
Exactly.
Well, it is.
Right?
Yeah.
So that is possible. Absolutely. You can absolutely do that. And I think that if you do own your home, that's where I think that you should be looking first, is to see, and you don't have savings for a down payment. Okay, I own my home. How much equity do I have in my home? And how much can I get access to reinvest? Now, I wish I had a whiteboard. I'm going to try and do my best here, actually. I'm going to try and use this here, because this is, I don't want to teach this lesson right now, half-ass. This is Wayne overcoaching. I'm going to try and do this because people get weirded out by this. And I need to get to seller financing. Don't let me give me 3 minutes to do this, and then let me get back to seller financing, okay?
Okay.
So
Timer on.
here's what I'm going to do. You own a house. I'm going to draw a square with a triangle on top of it. That is a house, okay? Then I'm going to draw another square with another triangle on top of it. Looks something like this, okay? This is your home, okay? This is the new property, okay? And then this home, think of this whole amount as the total value of the property, okay? Here's what I'm going to do. Which side was it? Was this side? No, it was that side. Okay. That's it. Just put a line in between it there, okay? That means that this bottom half means that this is equity, okay? It's backwards on the camera, so this is kind of hard. That's equity. So if it's a $400,000 house, or sorry, $500,000 house, this means that you have $250,000 of equity and you have $250,000 owed on the property. If you sold this today for $500,000, you would have to pay off the $250,000 loan with the $500,000 you received when you sold it. So if you got $500,000 from a buyer and your lawyer took half of that, $250,000, and paid off this loan, how much would you get back out? You would get $250,000. It's because you have $250,000 worth of equity here. That makes sense?
Yes.
So let's say now.
You have a minute and a half.
I have a minute and a half. Let's say you go to the bank and say, hey, I'd like to get a home equity line of credit on my house. They look and they see that you owe $250,000. They say, how much is the house worth? You say $500,000. They say, okay, we will give you a home equity line of credit up to $400,000, which is 80% of the value of the property. But you owe $250,000. So if you can borrow up to $400,000, but you already owe $250,000, how much do you have access to? $400,000 minus $250,000, which means you have access to $150,000. Okay. Now you have a home equity line of credit there for $150,000 that you can pull out. You can take that money. What's wrong with our light? We got to get that light fixed.
It should be replaced. Yeah.
Oh my God. So you can take this, borrow it, and use it as a down payment for this house. But what I'm going to show you here is when you borrow it, that now becomes debt. Okay?
Mm-hmm.
So now you no longer have, that used to be equity. Now it's not equity anymore. So this is all debt. I'll draw it all in. All of that is mortgage. All that blacked out is mortgage. And this is equity up here. Okay? So that means you lost equity in this house, but you gained equity down here in this house. Okay? So you just transferred equity from one house to the other house. If you sold both of these today at the exact same time, sorry, my coloring isn't matching properly, but if you sold both of these houses today, you owe $400,000 on this house, and you owe $350,000 on this house.
$750.
Does that math add up properly? Anyways, sorry, I'm doing this too fast. This is why I didn't want to do this very fast, because I didn't do it the way that I wanted to do it. But if you sold it, it would be exactly the same. You would still get out the exact same amount of money. Okay? You would still get $250,000 back. Same.
Yep.
But the difference is now you own two properties as opposed to owning one property. And if these values of these properties go up, wouldn't you rather own two properties if the values go up than just one? And every month when you get rent and you pay your mortgage payments and you receive cash flow, your mortgage is going to go down, which is going to create equity, and your cash flow is going to go up, which is going to create cash in your pocket. So I'd rather own two properties with the same amount of equity than one property with the same amount of equity. So anyways, now you understand that.
On the live chat here, Kirsten says, "My dude, that was extremely impressive with flipped cameras."
It was actually very hard to do. Thank you. And my light went out while I was doing it. But anyways, I say all that because I know that some people are like, I don't want to borrow the equity in my home. What happens if it fails? I'm like, well, first of all, you have to learn how to invest properly. You have to learn how to buy properties that are safe. You have to learn how to buy properties that are going to make money regardless of whether the value goes up or goes down. This is things that we teach. And I do not recommend borrowing the equity, your hard-earned equity in your home and your savings and investing in real estate unless you understand these things. Please, for the love of God. If you're just going to invest it in pre-sale condos or short-term rentals and some dome in the middle of nowhere, then yeah, it's a really dumb idea. If you're going to invest in some development project, yeah, really dumb idea. But if you're buying safe investments, absolutely. Absolutely. This is how you scale.
Yeah.
Okay. So if you have equity in your home, I would recommend using your equity. You can use it as a down payment for the next property. And then as the values of these go up and as the mortgages get paid down, you can borrow the equity in those properties too and maybe buy more, right? You can see how this can scale very quickly. All right. So now that we understand that, yes, you can borrow the down payment for another investment property if it's secured to equity. If it's secured to home equity or equity in another property. All right. Otherwise, the only other way to go about doing it would be through a private lender. So I said all the main banks and all the main lenders, major lenders, they have their rules. Private lenders don't have those same rules. So private lenders will let you do whatever you want. Some private lenders will give you 100% financing.
I'd say less about whatever you want. They make their own rules.
Yeah.
Yeah. So it's whatever they've established.
Absolutely. But they don't have rules that they need to follow.
Yeah.
Okay. So with that being said, private lenders are a great way to go about getting, unconventional financing and working it out. Maybe they give you up to 90% loan to value, or 80, but they don't care if you borrow the money from somewhere else. So you can get 80% loan to value. You can get the $400K for the property. But if you borrow it from somewhere else, they don't really care as long as they're in first position, as long as they get paid back first on the mortgage or on the property if it fails. But here's the deal: they're gonna make you pay for that.
They're gonna make you pay.
They're going to make you pay way more than what a normal lender is going to charge you. They're going to charge you significantly higher interest rates. I'm talking the difference between 4% and 15%. So that comes with extreme risk. So, if you're planning on doing this as a rental property, you're going to buy a rental property for $500K and you're going to borrow the whole purchase at 15. You're going to borrow 80% of the purchase, the loan at 15%, and then you're going to borrow the down payment at 10 or 15%. It's going to cost you.
Numbers don't work.
It's going to cost you, and there is no deal in Canada where that makes any sense. And I know there's a few people that like to teach borrowing the first mortgage and the second mortgage and the third mortgage for properties, and they're like, oh yeah, just rent it out. Totally, it's totally gonna profit. Yeah, no, that's terrible fucking advice. Do not listen to that, because $500,000 at 15% interest every year is $75,000 worth of interest for the year. If you divide that by 12 months, that means your monthly mortgage payment, which only goes towards interest only. Your interest only monthly mortgage payment for this $500,000 house is $6,250.
Oh, rent will cover it.
Oh, rent will cover that. Oh, don't forget your property taxes, which are about $400, which is insurance, which is about what, $200? $6,850. Yeah, I'm sure you can rent that out for $7,000. But even if you do rent it out for $7,000, you're making $1,150 a month. But what happens when there's 1 month of vacancy? What happens when, the furnace goes? Like, this is not sustainable. So the short answer, I gave you a long answer. The short answer is don't fucking do it. It's just very dumb, very stupid. And that's how you're going to get in a lot of trouble. Right? Yeah. So borrowing from a private lender for rental property is a terrible idea. It can be suitable for shorter term financing, say for a flip or something like that, only 3 to 6 months. Yeah, I can justify paying $30,000 worth of interest for 6 months if I can build in a ton of equity from the renovation and increase the value. And I'm going to flip it and sell it. Then yeah, maybe. But otherwise, I don't recommend it. Let's talk about seller financing. Let me just sort. Talking to you again.
Oh, okay. Sorry. Yes. So one other option that we have here, if you aren't, if you're not in a situation where you have equity to borrow, and we've determined that borrowing from a private lender doesn't financially make sense, and any lender, regular lender isn't going to allow you to borrow any money. The only other option that we really have here is looking into seller financing to purchase a property. Mm-hmm. So that's where the seller is going to carry their existing financing for you.
Or provide financing.
And you are going to take over and own the property, and they're going to be your lender.
Yeah. So if you can't get a down payment, then what you can ask is, hey, seller, would you finance this for me? Mm-hmm. And there's a few different ways you can go about doing that. There's seller financing is there's many different ways to structure it, mm-hmm. and different forms, and it's way too advanced for us to talk about on this podcast without a proper course. Actually, ironically, someone asked recently in a Facebook group about it, and I gave an answer, and they got really weird about it, and they just wanted the answer, and I told them, no, this is like an 8 to 10 hour course. Plus all the contracts and everything else. This is not something that can be I can give you the answer. The answer is seller financing. The answer is vendor take-back mortgage, lease options, or agreement for sale, right? But understanding these strategies is just not something that can be done in half an hour. I can explain how it works, but the contracts and how to set them up and how to do it legally, mm-hmm. to protect you and the other party is just way too complicated. So I highly recommend taking courses on these before you even think about it. And I would prefer that a lot of people get a lot more experience in real estate investing first, mm-hmm. before they start taking on these advanced strategies as well. Because the more advanced the strategy, the higher the risk.
Yes.
Okay. It's so easily and simply put that, hey, just ask the seller, if they'll carry the financing. But to actually put it all together, there's so much risk involved in it. And you want to make sure that you fully understand the real estate investing side of this business first. So that way the properties that you do buy are very highly likely to succeed. Yeah. So that will counter or outweigh the risks that you're taking on the seller financing side. Mm-hmm. Okay. You do not want to buy risky properties with risky financing.
Yeah. There's lots of really big potholes that you can fall into.
But I will say this. This is how Gabby and I built our portfolio, is through seller financing. And joint ventures and raising capital was much more difficult when we were getting started because social media wasn't what it was today, or it wasn't what it is today. And I was just thinking about that the other day, of all of the quote unquote big name investors who raised large amounts of money over the last 9-10 years, since like Facebook and Instagram became really popular and businesses on and influence became so popular on social media. I was thinking about like
when marketing became free.
Yeah, I was thinking about before that, like there were no big real estate investing influencers who were raising large amounts of millions of dollars for deals. And it's funny, in that 9 years since 2017, when it really, like when we started doing it, look at how many people have come and gone.
Yes. Tons.
You know what I mean? Just average everyday folks, IGA assistant grocery managers who are suddenly holding, $30 million portfolios on $28 million loans, you know what I mean? Or $30 million loans, all at high interest, thinking that they're going to become the next big, real estate developer or the next big real estate investor. And then all of them failed. Literally, it happens. And this is why, like, even just the other morning, I got into a frustrated rant. I had been thinking about it before that, and then I thought about it obviously during that, was that just anybody can go out and say that they're an expert online now and raise a bunch of money because people think that they're an expert because social media makes you look like an expert, and with zero experience. So I like to see people actually doing it themselves first before raising big amounts of money or doing seller financing deals. But I will say this is how Gabby and I built our portfolio early on. We did seller financing. When we were getting started, we were trying to raise capital. It was difficult. We hadn't really built that trust with people. And even though we had the experience, you know what I mean? We knew what we were doing. We knew what we were talking about. It was really hard to build that trust with people. So we decided to learn how to do it ourselves by getting the seller to carry the financing for us. And we grew our portfolio full of properties where the seller carried all the financing, where we didn't have to bring any down payment money. And we've been extremely successful with that. We don't do that so much anymore because, again, they are high risk deals. And I've been spending the last 10 years balancing our portfolio out to make sure that it's more cash flow heavy than over leveraged with 100% financing on properties. Even though it's great, even though buying properties zero money down and making all this money is great, you want to make sure that you're balancing your portfolio out for when storms come in, when interest rates go up, when your whole portfolio floods because Edmonton rained for 2 months straight. Or we're joking, but not joking. Or perhaps, there's a global pandemic. Like the cash flow that we had, that we balanced our portfolio out with, was the reason why we were able to survive. So I don't like saying, yeah, you could do it. You could buy as many houses as you want for zero money down, and the seller will carry the mortgage. Sign up for a new course. It's, yeah, if you want to learn how to do it, but please, just for the love of God, I want to make sure that you are being safe about this and that you don't put yourself into too much risk, because that's what other people do. And then you don't even know their names, but we do, and the damage they've caused.
But we do still have many of these properties in our portfolio.
Absolutely.
To this day.
I was just looking at one of them the other day. I was running some numbers on it. To this date, we've made, just looking at it. To this date, what was the number? I looked at a bunch. $160,000 we've made on that property.
Wow. That's awesome. And so that's zero of our own money in that deal. And is that property cash flowing as well?
Cash flow is $400 a month. That one there, we've owned that was 2017. So that one we've owned for 9 years, and I believe we have 3 more years on it. So the seller carried the financing for us, zero money down. So we didn't have to put any money in. They fully financed the whole thing. It cash flows $400 a month. We've made $160,000 on that property to date. We're projected to make somewhere in the range of about $200,000 when we sell it in 3 years for zero money down.
Yeah.
Now imagine you did 10 of those in 2017. How much money would you have cashing out in 3 years from now?
$2 million?
About $2 million. That's a retirement.
Yeah.
That's a retirement for a lot of people. That's everything you need, right? So there are some really, really cool fucking strategies that you can do and you can apply in your business.
Yeah.
I like to make sure that we balance things out, though, to make sure that that is extremely profitable for having zero money in.
That's really cool.
Right? If you know what you're doing, you could do 50 of those if you really wanted to, right? I could.
Yeah.
I absolutely could. Absolutely could, but I want to make sure I balance my portfolio out properly. So in the event that something was to go sideways.
Yeah, you started wholesaling those because we didn't want to put too much risk into our portfolio.
Absolutely.
And that was probably more so me freaking out.
Yeah, absolutely.
Sell these.
Yeah, absolutely. But it goes to show what's possible. And that's what we want. We want you to understand what is possible in real estate investing. And that is definitely a strategy that we could teach you. It is advanced. So I would want to teach you everything else about real estate investing first before I start teaching you that stuff, because it's like giving a baby a loaded gun.
100%.
Yeah. It's dangerous. And I've seen a lot of people do some dangerous stuff. And there are a lot of people in this industry currently doing dangerous stuff like that. So I want to be super careful to make sure that at the very least I put that baby through a gun safety course. Okay.
That's awesome.
Anyways, but hopefully that helps. There are solutions for seller financing. Yes, you can borrow money for a down payment so long as it's secured. And then lastly, if you really want to, you can do private lenders, but I just ask you to be very, very, very cautious and only in short-term situations. Yeah. Make sense? Hopefully that's helpful. Hope you guys enjoyed today's episode. Tomorrow we have a special guest. Calvin Hexter from Calvin Realty is on the show, investor-focused realtor in Edmonton. We're going to be talking about the Edmonton real estate market and the upcoming Recon Summit Series event on September 11th through September 13th.
Ooh.
See you guys tomorrow.
Bye.
Thanks for listening. Want to be coached personally by Wayne and Gabby? Then you should join the Real Estate Investing Masters Mentorship Program. Details are in the show notes to get started.